afternoon. So first I have to give a little disclaimer here, general government disclaimer that the opinions that I express today are my own and not that of any commissioner or the CFTC in general. My name is Brent Tomer. I'm a chief trial attorney with the Division of Enforcement at the CFTC. That means my day job is essentially leading teams of investigators and attorneys prosecuting violations of the Commodity Exchange Act and its related regulations. If you don't know what the CFTC does, we regulate the derivatives markets. So the derivatives markets are anything from swaps to futures, options for commodities and interstate commerce. That could be the S&P 500 future or cotton futures, and somewhere in between there are Bitcoin futures, which is why I'm here today. First and foremost, while we regulate the exchanges that offer Bitcoin futures, currently that's the CME, the CBOE. Certainly coming soon, we have NASDAQ and Cantor Exchange offerings in the works as well. We also do not regulate, however, spot virtual currencies. Not directly, at least. So we won't put a regulation requirement on a virtual currency. We won't go to a spot exchange where you can exchange your Bitcoin or a wallet provider and say you need to register with us. But we do have jurisdiction over fraud and manipulation of virtual currencies and interstate commerce. So that means that we will be looking to these exchanges and looking in these marketplaces for evidence of fraud and manipulation. And that's important for a couple of reasons. One, with respect to futures and options on Bitcoin, these contracts are settled to the spot markets. So at the end of the day, to determine what the price of the future is and how it's going to settle financially, they'll look to exchanges such as Coinbase to see what the last price of Bitcoin was there. If there's manipulation on these exchanges, if there's fraud that affects the price on these exchanges, that affects the futures markets as well. And we want to make sure that we have clear and open markets that are free from fraud and manipulation. And that's important, I think, for everyone in this room, for the entire industry as well as retail customers, that the fraud and manipulation are expelled from the markets as much as possible. I think it's safe to say that without clean markets, these innovations can suffer losses, customers can suffer losses, and we don't want that. So I wanted to talk a little bit about areas of concerns for consumers that we want the industry to look out for, as well as consumers themselves, of course. But first of all, I want to say that this year has been very exciting. The prices of virtual currencies have risen beyond anyone's imagination. I think the crowd in this room is evidence of the excitement surrounding virtual currencies. I actually gave a speech here at Money 2020 a few years ago, and I think the room was about half this size. So that's one anecdotal evidence of how much excitement is there. I've got another one as well. My father-in-law, who still carries a flip phone and does not have an email address for himself, called me a few weeks ago and asked how he can get involved in investing in Bitcoin. So that's great. It's great, but it also means that we're entering a new area here. We're bringing in new investors that may have a mutual fund out there, but maybe invest in a few stocks, but have never sat in front of a computer and traded on an active basis. These people are coming into our markets, as well as the traditional people who have helped develop virtual currencies, who have helped bring it to where it is today. I think it behooves all of us to keep an eye out for these new investors, as well as the existing and established investors here. So a few areas of concern. One thing I'll say is that customers need to be diligent and aware of the risk. It is on them primarily, but it's our responsibility to help educate. So some of what that means is again, I talked about regulation before. I think, obviously my view from a regulator standpoint is that some regulation is helpful for an industry, that keeping safe markets are useful for value and value to customers. But that doesn't mean that everything has to be regulated across the board. As I mentioned, at this point, other than money service businesses licenses and know your customer rules, spot exchanges in the US are not directly regulated by a financial regulator. And that means that they don't have certain rules such as segregation and certain rules that affect in bankruptcy how a customer is going to get repaid. Are they going to be a general creditor and share with all the creditors of the corporation, or do they get their own funds? Currently, there are no rules for that. That doesn't mean that certain things can be established by these exchanges to help the customer in that regard, but it doesn't mean they necessarily have to be. And customers should just be aware that there are differences here. This is not a securities broker buying you a stock. You're buying it yourself on an unregulated or mostly unregulated exchange. Some of the things that are part of every exchange, whether they're in securities or futures or in virtual currencies. There could be volatile market price swings. Obviously, we've seen some high volatility in Bitcoin and other virtual currencies over the holiday season, where Bitcoin lost, I think, depending on how you measure, about $8,000. Some of that regained since then. So some of these investors coming in, maybe prior to that, had the view that Bitcoin would just keep going up and up and up. Now that again is on the consumer, but it's our responsibility to make sure that they're aware that these markets can have volatility, and that you shouldn't be investing in something that you can't afford to lose to some extent. Along with that, there's flash crashes on exchanges, micro bumps or losses where the value of a cryptocurrency can drop briefly for a significant amount. It could cause issues, financially if someone needs to get out, or if there's other reasons why they can't hold on to the currency at a certain level, or if they have limits or something in place at the exchanges. There's cyber risks, of course. I think everyone knows that there are cyber risks in holding Bitcoin and other virtual currencies, including hacking and theft of Bitcoin in wallets. There are things that consumers can do to protect themselves, of course, and certain companies that have a higher level of protections on wallets. And then, of course, there's cold storage, hot storage, all of those sort of things. One thing I will say about cyber risk is it's not unique to virtual currencies. I think it's just something that we've seen a lot of in this space. But certainly the traditional markets can suffer the same sort of issues as well. Sort of the last generalized risk that I want to bring up is concentration risk in virtual currency. The vast majority of virtual currencies are held by a relatively few amount of people, meaning they hold a higher percentage in any given virtual currency. These, in some instances, these addresses that hold, like for instance, some of you probably have heard the term Bitcoin whale. These addresses that hold large amounts of Bitcoin are being watched. If something is sold out of those, or if they start selling, you're going to see a large swing in the market. This is something that, in terms of visibility, is probably unique to many virtual currencies. And there's good. It's certainly a good thing in many respects, but it can also lead to, huge swings in prices when the Reddit world sees that a Bitcoin whale is selling, for instance. I also wanted to bring up a couple of particular areas of concern that are sort of off exchange in the virtual currency world. A number of frauds that are being perpetrated that we've seen that we should all be aware of, and that the industry professionals in the room should be watching and protecting against themselves as well. The first is sort of a traditional scheme that's now been transmuted to the blockchain, I suppose. It's a multi-level marketing scheme scheme/Ponzi. These are schemes where a perpetrator will say, give me your Bitcoin, give me your Litecoin, I'll turn it into threefold in a day, or I'll give you 1% compounding interest per day. These kind of promises, while we've seen huge rises in virtual currencies, these kind of promises are not sustainable. Eventually, the perpetrators will not be able to pay the customers, and in many cases they'll start using downstream purchasers or downstream consumers to pay for the prior investors, a traditional Ponzi, for instance. We've seen a number of these out there. We should all be aware of them and taking a look and educating consumers about where there are promises that are too good to be true. Probably is. Something new that we've seen relatively recent are also copycat platforms and apps. These are apps in Google Store and the Apple App Store that are designed to look like established virtual currency exchanges or wallets. Or they can also be an internet address where the spelling is slightly different but very similar. A customer will download the app, insert their credentials, and the next day all of their virtual currency is stolen out of their wallet or stolen out of their account at the exchange and moved offshore. So customers need to be aware that there are these risks, that they should only be downloading for instance, the official apps, and industry professionals, exchanges, wallet hosts, et cetera, should be telling customers that, what is the official app and not to download these other things. Lastly, and something that I think is of sort of great concern to the CFTC, are these pump and dump schemes that are out there. Some of these are perpetrated through apps such as Telegram, where a group of people will get together, put all their money into a virtual currency, and then sell out once they get the price raised up to a sufficient level. Some of them advertise themselves to other consumers by saying that they'll just pump up the currency and then they won't dump. I think that's probably a fallacy. The people perpetrating the scheme are hoping to get out of it before the rest of the people that they brought in do. So we should be careful there. So how to protect customers? I think I've mentioned a few things. Know who you're dealing with is number one. If you're going to a trader or an exchange or a provider of Bitcoin or virtual currency services, and you can't see who runs the company, there's nothing on the internet about who runs the company, where they're located, or any information such as that, there's probably a reason that they're trying to stay hidden. And if it's a fraud, once they leave, your virtual currency will be gone. You won't see them, and regulators such as us may not be able to find where they are and who the perpetrators are. So know who you're dealing with. If you are using an advisor, if you're trading Bitcoin or virtual currencies, and you don't want to do it yourself and want to use someone else, use a licensed advisor. You can go to smartcheck.gov, smartchek.gov, and look up whether your advisor is licensed through the SEC or through the CFTC. That's a good way to find other information on your brokers as well. Another thing to watch out for is if a company, as I said, is promising huge returns. If it's too good to be true, it probably is. Run away from that. Aggressive sales tactics, where, sort of boiler room style tactics we're seeing a lot of. People are calling from all over the world, putting on fake accents, acting like they're next door neighbors, seeking to help people invest in Bitcoin. You put the money, send your money in or send your Bitcoin in, and the next day it's gone. So we see a lot of that. So those are just some of the concerns that I wanted to bring up in terms of fraud in the crypto marketplaces. I do, before I want to close, want to put in a little push for an initiative that the CFTC has launched called Lab CFTC. This is an initiative where we at the CFTC are trying to increase our outreach with the industry. I think established banks, established investment professionals usually have a line to the CFTC, know who to contact, ask questions, know who to go to. Lab CFTC there is here to help foster relationships with the fintech community, with smaller startups. You can go to our website, cftc.gov. There's a link to Lab CFTC. You can submit questions or seek to talk to someone through our website. You can also send in questions to labcftc@cftc.gov. And that'll put you in touch with the Lab CFTC group, which I am a part of, and other members of the commission, not just the Division of Enforcement, are primarily responsible for that can open a dialogue. As Matt said before, it's good to talk to your regulator. It's good to have a good relationship. While some people run away from regulators, my personal belief is that it's better to have an open dialogue, and Lab CFTC is one way that we're hoping to foster those relationships. So thank you.